Shopify shares are indeed surging. And I got to tell you something, David. I think that Harley Finkelstein may argue that the previous quarter wasn't as bad as the market said. This, though, is just a total reaffirmation of the old Shopify. The estimates handily beaten, and that's thanks in part to what I would say is a boost from, are you ready? What do you think helped him? AI.
Oh, yeah.
Yes, Iverson, number 3. Harley Finkelstein, Shopify president, joins us. I'm going to call this a first on CNBC because I've not seen it anywhere. Okay. Harley, I would say congratulations, but isn't it true that this is just a continuation of what was a strong quarter that people didn't like last time?
I absolutely agree. I mean, this is the best version of Shopify, Jim. We're focused. We're executing on the plan that we set out last year, and you're seeing it in our results. But I think this quarter in particular demonstrates a trend that we can achieve both seriously meaningful combination of growth and profitability. And just on growth for a second, I mean, when you exclude the sale of our logistics business, revenue was up 25% to $2 billion. That's our 5th consecutive quarter of at least 25% top-line growth. On the profit side, gross profit was up 25% as well to $1 billion, which grew faster than revenue. And then, your favorite question, how's it going on the free cash flow side of things? Our free cash flow margin more than doubled from last year. It was 6% to 16% this year.
It was almost triple, Harley. You're very conservative today.
Well, it's important now, whether or not, last quarter's results were there was an overreaction in the market or not. This is a Shopify that is growing. We can grow top line. We can grow bottom line. We're getting some of the largest brands at the enterprise level on. Point of sale is doing incredibly well. And I think these results demonstrate that the plan is working.
Okay, so people felt last time that you couldn't balance between revenue and profit. I think you showed them that you absolutely can. How did that happen?
Yeah, I mean, first of all, it's really important for us to make sure that you remember, if you go back to when you and I first started talking, 9 years ago at the IPO, let's say,
we both had hair.
I still have some hair, but a little bit less hair now. We had one on-ramp into Shopify, which was e-commerce for SMBs in English-speaking geographies. Today, we're this unified commerce platform. We have brands of all sizes and all geographies coming to us for point of sale, for B2B, for online retail. If you just think about our actual enterprise business, and you look at sort of where we're at now, this quarter alone, you saw Casper, Away, Therabody, QVC, Barnes & Nobles, the largest brands and retailers on the planet are coming to us as well. If you then think about how some of our growth drivers are doing, look at Shopify point of sale for physical retail. That didn't exist 5 or 6 years ago in the way that it does now. GMV was up 27% year on year for point of sale, and we've now surpassed $100 billion in GMV for our point of sale product. So all these drivers are working really well. We have our guardrails in place to make sure that we are very thoughtful about how we're spending, but the results speak for themselves.
Okay, so a lot of people are concerned about the macro. I was concerned about the macro when I read Etsy. It was very difficult not to be concerned about the macro when you read what Amazon felt about what was happening in their retail. What is your feeling on the state of the consumer?
Yeah, I mean, like you, Jim, we hear a lot of other companies talking about a softening consumer spend. Our data shows us that merchants on Shopify continue to outperform the broader market. And I think that's happening for a few reasons. The first is, remember that if you think about your top brands, the brands consumers absolutely love, those are all on Shopify. In fact, new brands are being built and more brands migrate to us every single day. But the other thing to keep in mind, our business model, what's really amazing about our business model is that we have a very diverse set of verticals of merchants. So we have, scrub companies like Figs and pet product companies like BarkBox. We have Nestle and Heinz and Mattel and Staples. So there isn't one type of a particular type of merchant on Shopify. We're across all types of verticals. Also, we have a great direct-to-consumer business. We also have companies like Carrier who's selling their industrial heating products using our B2B product. So whether it's online, offline, D2C, B2B, local, global, these are the brands and merchants coming to Shopify, and we're seeing great success with them.
Harley, it's David. We talk a lot here about AI and its impact in a real way. You talked about it on the call, but you said, leveraging emerging technologies to enhance your feedback loops. And you went on to sort of explain a bit what you're talking about in terms of sharper, more iterative feedback. But can you explain to our viewers how you're using it in the business and in a real way explain what exactly you're doing with the information that you perhaps would not have otherwise had quite as deep a look at in the past?
Yeah. I mean, we look at AI in two ways. One is how can it make Shopify's operational efficiency better? So, I mean, to your example, David, the way that we're looking at marketing channels, we're able to now experiment at a much faster clip. I mentioned this on the call a half hour ago, but in Q1, we began to experiment with an emerging new social platform. We put a little bit of money to work to see what the results would be. It worked really well. We doubled down on it in Q2, and we saw about a 50% increase in customers and merchants coming to us in the quarter from the previous quarter on that particular channel. This ability for us to make much smarter bets within, of course, the financial guardrails and an average payback period of 18 months means we can make smarter decisions much faster. Same thing goes in terms of how we arm AI, our merchants with AI. If you think about all, we have millions of stores on Shopify. We're now about 11% of all e-commerce in the US, and we're growing our market share considerably there. We're able to give our merchants great tools to make better decisions so they can place their own ads, so they can write better marketing content, so they can make better decisions to run their business. And in both cases, whether it's internally or externally, these types of innovations are making our merchants more successful, and our business is predicated on that. So it makes us more successful.
Well, look.
Hello, everybody. Today, stock of the day is Shopify after explosive reaction to today's earnings. It's up 21.73% right now. And the question is for long-term investors, what should we do? Should we buy the stock now because we hope it goes up to 90 or even up to, let's see, 170, if I'm seeing correctly. Yes, 176. In my opinion, as you could see, I drew a trend line in here. It's more like a, let's call it rough trend line, downward trend. As long as this light blue line is not taken out, unfortunately, there's still a chance of downside follow through, especially when the market is weak in general, like it is now, or if the economy is going to get even weaker in the next few weeks and months. But hopefully sooner or later, let's have a look when the next earnings report is expected in November, or is it roughly end of October and November, end of October, beginning of November. Hopefully at this time, with the next earnings report as a catalyst, this blue line will be taken out and the upward trend that started in October 22 will continue to the upside. Then the target, the near-term target, might really be the $90 range, $90 area. And if we want to look further out, who knows, maybe if we can even break this one. Of course, it's a very long-term price target. Whether we can get back here, hopefully so, I'm not sure. So I'm thinking about putting on a small position in this area here that's roughly on a pullback 60, maybe on $60, and hope to at least get the $90 upside. And if everything turns out well, then hopefully I can hold the stock even longer. Okay, that's it for today. See you tomorrow.